Hello and welcome to Weekend Investing Daily Bytes. It's a great pleasure to start the series again. I was off for a few days and I hope this refreshes our commitment to bringing you fresh ideas and insights on Daily Bytes. So let's start the episode today. So the topic for the day is getting emotional with stocks, and I'll talk about how emotions play havoc in terms of decision making when it comes to stocks. And let's take a look at the market first. So market was in fine fettle. In fact, last couple of weeks that I have not been here, markets have been running off very, very rapidly. Autos today up 2.5%, real estate up 2%, consumption stocks, FMCG, energy stocks, public sector enterprise, all doing very well. Nifty itself closing up almost 0.75%. PSU banks and IT stocks were the ones which were sluggish. Bank Nifty, Pharma and private banking was also a bit lower than, relatively lesser aggressive as the market. But over the last 1 week and over the last 1 month, stocks have really come back. Nifty is now hardly a few percentage points below its all-time highs. We've kind of kept pace with the global markets in terms of, in fact, we've outpaced most of the global markets in terms of rallying harder. We've sort of beaten most markets in terms of coming back close to the all-time highs. On a 3-monthly basis also, you can see autos up to 24%, consumption stocks up 18%, private banking up 18%, real estate up 14%. Very, very healthy numbers for the last 3 months. And for the financial year so far also, barring IT, some metals and commodity stocks, pretty much autos and PSU banks have led the rally along with FMCG. For today's session, Nifty was up 0.72%. Small caps and mid caps did much better in terms of gains, 0.9% to 1.2%. And Nifty Next 50 was standing out with exposure to Adani Group at 1.58%. In terms of weekend investing small case performances, MIATH2 has been a comeback story in the last 4 to 6 weeks after its poor performance earlier. Today also it gained 2.34% up, NNF10 up 1.6%, also very, very strong, and in the last 1 year is up, I think, somewhere close to 23-24%, one of the strongest contenders out there. MIMT all cap, which was largely in cash, is also deploying gradually, up 1.2%. MI EverGreen doing very well, 1.2% up. MI30, MI20 all up more than 1%. MI25 a bit sluggish today at 0.4%. Overall, a reasonably very good day for all the strategies. In terms of the heat map, you can see most of the greens are around autos, some FMCG, consumption stocks, some oil marketing companies, insurance companies, banking a bit dull, IT totally dull, and cement and steel also slightly in the red. Some FMCG is also flat. So overall, a reasonably good distribution. In terms of top gainers, India Bull Real Estate and UTI AMC up almost 15% each. HDFC AMC, Gujarat Alkali up double digits, 10 and 11%. Max Healthcare also nearly 10% up. So huge gains on these 5 stocks. In terms of laggards, Muthoot Finance down 12%. TCNS Clothing down 7%. Aster DM, LG Equipment and Indoco Remedies between 4 to 6% down. So some losses but very large gains in some of the stocks. So you have all seen the movie. You are basically known to the idea of how emotions impact our decision making, but I really want to sort of beat this point home for new users also, that in conventional investing, where we are taking ad hoc decisions and we do a lot of research, we deep dive into companies, we read a lot about them, and nothing wrong in that. We try to estimate based on our assumptions the performance of the sector coming in the next couple of years. We estimate the quality of the management. So all that is very, very qualitative. And the more we delve into it, the better we feel about our selection. Then there is confirmation bias that comes around from our friends who are also, or maybe we try to find those people who are confirming our bias about the company. We read blogs about it. We use their products of these companies. When the results come, we read the notes and the annual reports and try to find the positivity out of it, even though there may be 8 negative points, but there may be 4 positive only. So the rational thinking, or the non-emotional detached way of assessing that stock gets lost for most people. I'm not saying for all, because there are very sharp, shrewd investors out there who really do very, very well, and hats off to them for doing this over and over again over each cycle, in identifying the right time to get out and the right time to get in, ahead of most others as they realize it. But I am talking about a normal investor, an average investor, who does not have that acumen, because investing is an art. Everybody cannot be a Picasso. So some of us are very poor artists, and we need more help in terms of deciding how we should take decisions based on this. So again, the more attached you are to the stock, the more qualitative are your decisions, the more difficult will these decisions be. And as if you recall from this movie that I am quoting, Munna Bhai, Dr. Asthana, who is the medical professor, says that if I operate on my daughter, my surgery, my hands will be shaking, because even though he's an expert at a process, even when an expert is trying to operate that process on a person who he is emotionally involved with, that process may go haywire. That's the whole point of this message, that even though you are an expert and you are a professional in that field, and you have a set process, and you may have done 10,000 or 100,000 surgeries of the same kind, and maybe you can do it with your eyes closed. But when it comes to the fact that that the person that you are operating upon is somebody near and dear to you, and the outcome of that surgery is going to impact your personal life tomorrow, and that you are the creator of that problem, or that miscalculation, or that process going bad, and it will sort of haunt you for the rest of your life. That all creates this kind of a human behavior issue, which makes you deviate from the process. Nothing wrong with the process, nothing wrong with the patient, but it's just the combination of all this which makes us do some things which were not destined to be. So the more your process is definable, the more it is quantifiable, the more it is crystal clear that if this happens I will do this, if that happens I will do this, if margins go this way I'll go there, if market share goes down by this much I'll do this. These if then but analysis has to be done, because once the stock falls, then you start looking for reasons to hold on to it, just like Jack in Titanic or something like that. So that doesn't work. You have to be proactive. You need to know ahead of the time how and when you will let this stock go. And that is pure detachment. That is possible only if you are detached with the stock. If you are engaged or married to the stock, it will not happen. Or if it will happen, it will happen 99.9% by the time it is very, very late. I'm not even saying late. I'm saying it is very, very late. By that time only you will be able to really detach. Just like in any marriage, if I'm married since 25 years, it is not easy to let go. Even though I may have, 10 reasons, but it won't be easy to let go until it is very, very delayed. So the same happens with stocks also. Not saying every time it will happen. Some attachment stories have made people billionaires also. But there is a lot of survivorship bias in that. We only see success stories. There are millions of failure stories which will never even come to light. And we will say, okay, just look at Mr. XYZ, he held on to that stock and he's he's become a billionaire, so I should do the same. It doesn't work like that, unfortunately. So take stock of your emotional attachment with the stock and try to have decisions of how you are going to detach, how you are going to, at least have a wall between yourself and the stock, and you will be able to get rid of the stock if and when that need arises. This is a very deep subject, and I can only scratch the surface and make you curious about it. But this is something that will help you enormously. Whoever may be listening to this is an enormous sort of a process mantra to have. Stay detached. Only then the success comes to you. Besides that insight on the Nifty, we have come back to this resistance line, a huge resistance, I would say. We topped here in October around 18.5, 18.6, dropped down to 15.2, and now we've come back all the way to 17.8. So hardly 5% odd away from all-time highs. We've crossed the 200 DMA also very smoothly. Excuse me. And so my idea would be that it will be nice if we sort of consolidate here, maybe even come back to 200 DMA if required, and then take it out. But who knows? I mean, if this market is going to go like this upwards from here, once it starts to take off 18,000, I think it will go very rapidly up. It may go very rapidly to 18.6, maybe go sideways there, and then maybe move upwards towards 20. That is possible. The market, however, is a bit overbought, but in the past we've seen the same overbought levels have been there, and market has kept rising. Again here, kept rising. So staying overbought and is no reason for you not to stay bullish on the market. A lot of people make this mistake that RSI is overbought, let's start selling the market. It's a sure shot killer sometimes. At times, of course, it is beneficial also, but more than overbought, I think oversold regions are more sort of giving flashpoints as to where to start looking, at least for the turns. So my sense is that there is no reason to believe that this will not go up, but I would be happier if this entire very sharp move gets consolidated, so that some fluff and some froth gets taken care of, and then we move upwards. But who am I to say how the markets is going to behave? So thank you so much for watching this new series of Daily Bytes again. Please do share this with your friends and family. Please do subscribe to this channel. Please do let me know what you would like to see on this Daily Byte series. I'll try to incorporate it. Thank you also so much for this tremendous response to our Independence Day offers, and for your patronage to Weekend Investing as a vehicle of your choice for investing. I'm really grateful for that, and I hope that we are able to do the task pretty much up to your expectations, although we will always be trying to beat that. But we do hope that our support and our response time and whatever content we bring to the table is worth your while to be associated with our brand. Thank you so much, and I'll see you again soon. Bye.